The three major currency pairs, the euro, the dollar versus yen, and the sterling versus US dollar, are higher to kickstart the new trading day in the North American session. I'll take a look at those three currency pairs and a bonus look at the dollar versus Canada as they prepare for their interest rate decision later this morning. The FOMC rate decision will also be made later this afternoon at 2 p.m. Both the central banks are expected to cut rates by 25 basis points. What do the technicals look for those currency pairs? So let's get started. Looking at the euro versus US dollar on the hourly chart, I recall from yesterday, and in my videos, I talked about how the market had stayed above the 100-hour moving average on this dip. We moved all the way back up to the 200-day moving average, and the price moved above that, the 100-day moving average. That's the blue on this chart. The price moved above it on two separate occasions yesterday, and each of the time the market moved above that level, it failed. The momentum could not be sustained. The price in the Asian Pacific session moved up, used this high of the swing area as resistance, and rotated back down where we fell below the low of the swing area, and then also below the 100 and 200-hour moving averages, or the 200 and 100 in that order. Price tried to stay below those levels, but lo and behold, that failed, and the price then started to move higher away from the now converged moving averages at 1.16325. That level is going to be now the barometer for both more bullish or more bearish. For the euro versus US dollar, stay above is more bullish, move below is more bearish. On the downside, we need to get below the low prices that we saw in trading today, and then maybe even going back to Monday's trade as well, right here. And if we are able to get below that level, which is about the same, I guess, then that opens the door for this swing level down through here between 1.1581 and 1.1597. Conversely, stay above and keep the bias more bullish in this pair, and we start to look again for the 100-day moving average. That would be the next target. That with two fails yesterday, we have to get above that level and stay above that level. If we're able to get above that level, then we still have work to do because we need to get to 38.2% retracement of this move down from the September high to the low price that we saw in October. We did move above it at this point right through here, and then extended up to the 50% retracement level up through here. But that failed, and when we broke below that level, we've stayed below that level since that time. So need to get above that level as well on the top side. So that's my look at the euro versus US dollar right now. Bias is holding on tightly to the a more bullish bias, at least in the short term, with the price above the 100 and 200-hour moving averages. So let's take a look at the dollar versus yen next. And this currency pair, like the euro versus US dollar, had an early fail. This time for the dollar versus yen, we saw that the pair moved to the downside, so the dollar was moving higher in the early session. The dollar versus the euro, and the dollar is moving lower in versus the yen, so they go in opposite directions. Anyway, price moved below the 200-hour moving average, which sort of did its job yesterday in holding support, and we did its job holding support here as well. So break below that level should have led to further downside momentum and change the bias more in this direction. But as you can see, it didn't. The price moved back above those levels, and we moved back above the swing area right through here. And we moved all the way up to the 100-hour moving average, which we broke below yesterday and stayed below. So moving back up to that 100-hour moving average has kept the sellers in play. And as you can see, we're now in a neutral bias in the short-term place, with the price out below the 100-hour moving average on the top side, above the 200-hour moving average on the downside. The difference between those two is looks like around 65 pips, and we're trading right in between those two levels at the 152.19 level. Ultimately, the price is either going to have to break to the upside above the 100-hour moving average and stay above that level, or move to the downside, break below the 200-hour moving average and stay below that level. On the top side, we do have this pretty decent ceiling that came into play right through here at the 153.27 level as a high of that level. That's in between a swing area between 153.15 and 153.39. So getting above that level ultimately would be the goal for the buyers. On the downside, if we start to move lower, we're back into this range right through here. Let's take a look at the sterling versus US dollar. And if we look at it, we've seen pretty steady move to the downside. That move to the downside saw the price extend below the 200-day moving average and also below this double bottom right through here. This double bottom came in around the 132.47 level. We came down to test that level. It actually moved a little bit below yesterday, but could not sustain the momentum and rallied into the close. That rally to the close came up back toward this old high. We did move a little bit above it, like we did moved a little bit below it here, but then rotated to the downside, falling below these two lows through here in the process. And then the 200-day moving average, that gave the sellers the go ahead to push to the downside. Indeed, we did. So the easy decision for traders now is stay below the 200-day moving average. As long as the price stays below that 200-day moving average, the bias can continue in that direction. Where do we go? Well, if you look at the daily chart and look at the 200-day moving average, this break below it is the first time since early April 10th, I think. And we've now entered into this range right through here. This swing area was defined by this high. It was defined by this low. It was defined by this low right here. It was defined by this low right here. And so this area between the 131.45 and 132.029, you can add the 38.2% retracement of the 2025 trading range to that mix. So let's call it 131.40 to 132.029. I know it's 57 pips of a support down here, but that ultimately would need to be broken to increase the bearish bias on the downside. As you can see, we entered just into that area right around the low price today, came in at the 131.99, so right around the 132 level. We need to get below that level to increase the bearish, we have to get below both these levels to increase the bearish bias for the pair. We could see support buyers in this area as well. Just be aware, be prepared, but stay below the 200-day moving average, more bearish. Finally, I thought I'd take a look at the dollar versus Canada as they have their interest rate decision today. We are seeing the dollar more weak in trading, since the employment or the CPI data on Friday is taking the price lower and away from that 100 and 200-hour moving average. It also took us below this swing area right through here, which was defined by a number of different swing highs here before breaking to the upside. It came down to that level, broke to the upside again, came down to that level, broke to the upside again, came down to the level, broke to the upside, so on and so forth. All the supports that we broke below that area yesterday. This is now a topside resistance between 139.68 and 139.75. If we do move higher from here, getting above the 38.2 and staying above the level will be step number one. Then we start to look toward these levels and then the 100-hour moving average on the top side. On the downside, and trading here today, we did move below the 200-day moving average, but the market said, hold on, we can't go just yet. We have that decision and all the stuff that's going to come out of that. But that 200-day moving average corresponds with these lows right through here as well. So that's going to be a key level. And you can see we fell below both of those levels near the 139, 39 it looks like, and down to 31. And if we stay below those levels, it'll be more bearish for this pair. We start to look toward the 50% retracement level of the same move to the upside at 139.02 as the next key target. So there you have it, a look at 4 of the major currency pairs to kickstart your day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.